All right, welcome to the weekend video. This is Enda here from bullwaves.org. And if you like what I do, check out bullwaves.org and sign up for the nightly updates. Okay, this is a little bit of a subdued initial opening, but it's been a couple of weeks since I did a video. And I thought, why not Thursday instead of Friday? So hold on, I've got a bit of a cold. Yeah, why not Thursday instead of Friday? I think I always say it, but it's been an interesting week. Definitely in the banking sector. Definitely it's lining up to be quite interesting in the currency, in the dollar FX market. And there is something brewing in the precious metals market. Whatever is happening in the chief of speculative markets, that is the cryptocurrency market. I'm going to talk about that later, but I have a hunch, and you're not going to like it. Okay, let's go for euro dollar. This is the 4-hour count in euro dollar. Let's go to the daily count here. The long-term count is looking for a wave 2 low. So there is a possibility that we have wave 2 in place, but I don't prefer that. I think we have a triple combination working out here. So a series of 3 waves coming together to create a larger 3-wave pattern. So that goes up there. So I think we can get rid of that for the moment. So this is the 3-wave pattern that I'm working with. And it's 3 down in A, 3 up in B, and then 3 down in C. And you will see on the daily count, or sorry, the 4-hour count now in a second. So it's wave 2 we're working with here. This is wave 2. I have it in red in this one. So we have 3 down in wave A, 3 up in wave B, and then 3 down in wave C. You can see that the action over the last couple of weeks has been corrective to the upside. I was looking for a 5-wave pattern lower in wave C, as you would normally expect, but that is not what's happening here. This is definitely not an impulsive form here, so it's not a 5-wave form. It is 3 waves down. So we've got wave A and B almost done. So we've got the hourly count here. We can see we've got wave A down, and we've got again a possible flat correction pattern going on here in wave B. So we've got 3 up in wave A, 3 down in wave B, and then a 1, 2, 3, 4, 5 up in wave C. So it's 3, 3, 5 in wave B. It looks like we've got a 3-wave pattern lower in wave 4 of C today. So we've already, I think, achieved the minimum expected for wave C by breaking out above the wave A high here. So we've got 5 waves up underway in wave C, looking at about that, between 109.15 and 109, let's say 70. The 109.70 marks about 62% retracement level, so we'll see where we land to complete wave C, and then we should head lower into wave C of 2. So it's a lot of three wave forms here, so there's a lot of C waves going on, and it does in general explain the non-active nature of this market. So it looks like, well, today's Thursday, so we have Thursday and Friday. We have enough this week. If wave C wants to complete this week, we have enough time to do it, and even reverse down into the larger wave C of 2. Let's see. I marked the wave B low here, so 107.95. If we break 107.95, that should indicate that wave C of 2 is underway. So that is one to keep an eye on there. Pound dollar it's a little bit frustrating, to be quite honest. We have a 3-wave pattern up in wave 2. We have a possible 1-2 pattern in place off that wave 2 high. But what's going on here? So go to the 4-hour count. You can see that's the wave 2 high. We have 5 waves down in wave 1, 3 up in wave 2, and then what's happened lately? Yeah. A bit of a conundrum, to be quite honest. There's there was a very interesting count developing earlier on this week, but we have retraced too high, almost too high for that to remain valid right now. So I am not going to stick my foot in it by calling this right now. Larger degree wave count calls for a decline in wave 3 of 3, but we have not consolidated what's happening here. I haven't, or this pattern has not revealed itself to me yet, to be quite honest. The working assumption is that we have a series of 1-2s, but and that still works. The only problem is we've come so close to the top here, we've come so close to that invalidation line that it's almost a foregone conclusion. Hasn't happened yet, but it's almost a foregone conclusion that we break 127.73, call it. If that breaks, then it's going to be back to the drawing board here, I'm afraid. So that cable is up for grabs at the moment, I think. We go to dollar yen. This alternate wave count for wave 1 and 2 was triggered this morning. I switched to it last night, but the overnight action has basically triggered it, to be honest. So we've got 5 waves up in wave 1. So, well, let's zoom out a little bit. I should go out to the daily count here. We've got a 5-wave pattern developing in wave 5 of C. So we've got wave 3 done, wave 4 done, and we should be moving higher in wave 5 overall. So we've got wave 5 here. This is wave 1 and 2 of 5. So we have 5 waves up done in wave 1. We're working on 3 waves down in wave 2. I'm looking at that previous 4th wave low around 145.80, 145.50 for wave C of 2. And that should come in this week. Yeah, most likely. Well, early next week, maybe. The pattern was pretty much up for grabs, I think, until, what was it, Wednesday morning. And we turned down a little bit too far, came too close to the previous low here. So I changed last night, and it spilled down overnight into a third of a third. So, or a third of wave C. Excuse me. So we're coming down 145.90, let's say, is where I'm marking 145.80. We're getting down into that range now. We've got one previous 4th wave low tagged. The next higher degree previous 4th wave low is 145.90. Do we get there? Quite possible. It looks like we've got a wave 3 of C done. We should have wave 4 and 5. That could bring us down there. As far as the 4-hour count suggests, that's kind of where you'd look anyway, because a 50% retracement in wave 2 is pretty standard. That's down 145.60. So let's look for that wave C of 2 to complete over the next couple of days. Now, daily count in the Dow, we have 3 waves up in wave B done. We have wave A and wave C reaching or have reached equality, and we've tagged the upper trend channel line as well. We have, turned down in momentum on the daily count since probably wave 3 of C. We have a completed pattern. We've got 3 down, we've got 3 up. What's left is 5 down. If we go to the 4-hour count, we have a 5-wave pattern internally complete. You can see that's where wave A and wave C reach equality. So let's go. Let's get in here and mark that. So that's wave A equals C at 38,690. We've got a cooling down off that level. And I'll show you what I think is viable at the moment. But you can see that the pattern or the price is tagging that upper trend channel line, coming back, tagging and coming back, tagging and coming back. We've had no, major, since what was it, October 23, we've had a blowout rally. Excuse me. And we've had no consequences for that rally yet. So it's 6 months later. It's about time there was some consequences for that. Let's go to the hourly count here, and I'll show you what's upon my mind at the moment. We have an ending diagonal pattern which could explain the amount of overlap that we've got going on here. So 3 up in 1, 3 down in 2, 3 up in 3, 3 down in 4, maybe 3 up in 5. There's an allowance here for 3 waves up in wave 5. This will be confirmed if we break wave B here, so that's 39, call it 39,120 at wave B. If the market breaks above that, then that pretty much confirms wave 5. It looks like we're going out to a new high. I like the internal relationships in here. We've got wave 1 at 100%. Wave 3 came in at 78% of wave 1, just below 78% of wave 1. And then wave 5 would come in at about 62% of wave 1. So, that kind of contracting nature of the pattern in an ending diagonal that would be satisfied by that sort of action. This pattern does enough for another week of, torture, for me, at least. Maybe we turn lower. I don't know. If we do, I'm all ears and all eyes, and very willing to turn bearish, seeing as I am, Mr. Bear. But let's see. I will allow for that fifth wave there. If it doesn't happen, I'm all ears for letting the market speak. And if we break below that wave too low, and we start impulsively moving lower, then maybe we'll speak to a top for wave B finally. If we go out of it, go to the daily count here. A top for wave B at a new all-time high, allowing for a decline back down into wave C would be great. The alternate count here for the weekly count, I think, and maybe it's even more fitting. The alternate count would be for a 1 degree higher move here. So maybe this is wave A in black rather than wave A in red. And that would suggest that the next decline is going to be even more sustained and even more, even heavier and even more destructive than even what I've allowed for. So put that in your pipe and smoke it, I suppose. Let's see. Let's move on. We have gold, a new high today. That's in line with the previous alternate count. So, we're allowing for that third wave rally to kind of expand here. The action over the last few weeks, or let's say a couple of months, does not speak to the overtly bullish wave count that I've got here. Now, it could develop in that way. The action in the last week has most definitely, accelerated. But this could also be a C wave acceleration. So I am allowing for a possibility for that. It would be a larger ABC pattern. All-out deflation would take down gold anyway, so there'd be there's no argument with that. I just question whether an all-time high in precious metals, along with an all-time high in speculative assets, is actually tenable. Because if the rug is pulled out from under the general asset market, then gold is going to go anyway. There's no two ways about it. It isn't until all-out fear arrives that gold actually takes its. Usually, that gold would shine, and people would start running to it as a kind of a hedge of collapse, all-out collapse. So we ain't there yet, I'm afraid. So I'm questioning whether it's possible that we actually have a speculative frenzy that has bled into the precious metals market, and that's a real possibility because it seems to have bled into everywhere. So don't be surprised if it's bled into this would be someone's gold is usually people's pet mania. They always love it, no matter what. Okay, let's move on. No, I need to kind of flesh this out a bit. Okay, let's go to the hourly count. Possible extension in a third wave of a third wave. If that's the case, then this rally will continue. But if we start to peter out, let's say we break back below that previous 2088 again, I would really start to question this rally. So 2088 at the previous wave one high here, that would draw into question this bullish count. So just watch for that. Okay, let's move on. Crude oil. Crude oil would definitely raise a question or two about the general conditions for a, how would you say, the conditions for a commodity market breakout. If crude oil is in a corrective up and a breakdown of a correction upwards, I don't see why anything else should be, in the commodity space should be. I know precious metals is in a world of its own in that sense, but I don't see why it should be anything or held in any difference than, let's say, crude oil. If we go to the daily count here, you can see a possible 1-2 pattern here for crude. 5 waves down in wave 1. It's been utterly corrective to the upside, sideways basically since December. So the last 3 months have been sideways. So for the moment, the main count is still a second wave correction higher. If we start breaking down, especially if we get below wave B here, so that would be 7140. If we break below 7140 again, it should indicate that wave 3 is underway. And that's the base case scenario here. We've got a possible top for wave 2. Not kind of, I'm not bragging about that or anything. I'm not shouting or screaming it. It's just a possibility at the moment. We haven't broken down. We haven't broken support yet. And we haven't, there's been nothing really to indicate that that we're rushing down into a third wave anytime, well, not anytime soon, but immediately at the very least. So I would watch next week for a possible impulsive decline into wave 1. If we do get that at that 7140 level, I would really perk my ears if we get down there, because that would be a real signal that crude oil, that black gold, is actually turning down. Okay, so we have the S&P. Let's move on. S&P again. If we go to the daily count here, wave A equals C on let's move that out of the way a bit. Wave A equals C. Oh, of course, we're at new all-time highs in the S&P, the wider market. Of course, we've had a screaming rally over the last few months. Exactly 29th of October, so exactly 5.5 months. And of course, 5.5 months turns everybody into, Mr. Speculation, fear of, banking. I'd be fear of banking right now, but everybody is afraid that they have missed the chance to bank the run of a lifetime. But if you're buying in now, you've already missed the run of a lifetime. So I don't know what you're running into, running headlong into a concrete wall, I think. So A equals C is still slightly above us here on the S&P, 52.15. I think I mentioned that before. It's a B wave top. You've got wave A down, wave B up, and wave C left to come. So, like I said, in the Dow, this could also be 1 degree higher, and we could be working on an even bigger collapse into wave C, a la 1929, that kind of stuff. So I must admit that this week has a kind of a harbinger feel about it. It has a September 2008 type of feel about it, where you have these cracking facades everywhere. There ain't an office block in Manhattan that doesn't look like it's about to go bankrupt. There ain't a bank in the world right now that doesn't feel like, I would imagine, the executive board, I would imagine, are feeling very shaky right now. So don't be surprised. Please don't be surprised if we actually do start to see some sort of Lehman-style collapses pretty soon. I think Lehman was, which one? AIG was 80 billion. Lehman was at 120 billion or something like that. We had New York Community Bank yesterday, $100 billion business, just gone, collapsed 40% and then rallied 100%. I don't know, some stupid kind of knee-jerk reaction. Everybody wants to buy the bankrupt business right now. So until you're actually left with the capital wipeout, that's so particularly stupid that it hasn't bit people yet enough that they're willing to continue to do it. A bankrupt institution, the shares rallied yesterday massively, but the shares are about to be wiped out. So, I mean, the institution, the bank itself, is actually bankrupt. It's Federal Reserve, or the FDIC, is going to liquidate it and sell the assets. And your shares are worth nothing because the shareholders will be liquidated. So, oh my good God! Yet people rush in to buy the slop. So anyway, and by the way, they're not going to get a deal unless no bank is going to come and buy that. They're not going to come and do a share buyout if the shares are rallying. What they're going to do is they're going to insist on the FDIC actually declaring the bank bankrupt and wiping out the equity, and they'll buy the assets. So, at least I wouldn't anyway. See, why would you buy something that's been bid up? They actually want the assets for less than, pennies on the dollar. They ain't going to get it for pennies on the dollar if they go buying it at market. So anyway, that's what Robin Hood has done. Rob the poor, pay the rich. Here we are. A equals C comes in at 52.15. Let's go back to the 4-hour count. You can see that this kind of chugging along has happened over the last couple of weeks. The momentum die out ever since, actually, probably the top of wave 3. We've ran higher, but it's been a real kind of struggle to get up there. You can see that we are tight. We've punched above the upper trend line, but on a failing, internal momentums, kind of pushing the upper line, pushing the upper limit line here on momentum since the middle of wave 3 of C, but decreasing and kind of, how would you say, beginning to run on empty here. The 4-hour count shows you kind of the way that the arc of the upside trend has gone, beginning to lose, or has lost complete momentum, really, to be quite honest. But the final count here in wave 5 is still up for grabs. You could count this as a standard 5-wave pattern, and I have done that. And that would give you wave 1, 2, 3, 4, and 5. So that would be something like this. At the moment, this is the alternate count. So that would give you 5 waves up in wave 5 alternate. The ending diagonal pattern shows something a little different, and that gives you 1, 2, 3, 4, and 5. Depends on when we get out to a new high today. hey, why not? Everybody's buying, so it'll go to a new high. The wedge is showing a contraction to the upside. The momentum is showing a contraction to the upside. Let's just see whether it happens or not. If we get squeezed out and it turns down. So far, we've got a smaller degree 3-wave up. Maybe an impulsive decline. I don't know. It's up for grabs. We've got 2 days left. I think the US market is just open, so we've got 2 days left here. Let's see what happens. Okay, silver. I have shown you, I think, the alternate count here for silver, which is a possible 3rd and 4th wave. We've got 3 waves up so far. The price has. I have gone with the bullish count for the moment, but I will admit again and again that it is so tantalizingly obvious and clear here that this is 3 waves up. I have marked the wave 1 high as an indication of a reversal lower, so 2350 mark is a pretty darn important level on this wave count. And if we break that, then we switch to the alternate and we go lower for longer. Like I said, general deflation across asset markets will take precious metals market lower initially anyway. Okay, so for the moment, we're working on the assumption that we've got a wave 1 up building, and this would be wave 3 of 1, but this 2350 level must hold for that pattern to remain valid. Okay, now I'm going to show you something that I'm a little bit worried about, and that is this. That's this. $38 to 68, so like a 45% rally in a matter of weeks since actually 23rd, excuse me, the 23rd of January. So 23rd of January, February, March. 6 weeks. A 45% rally in 6 weeks. At the end of a C wave. Now, you just chew on that for a second. I have noticed something. We all know, right, that the crypto markets are used worldwide for people, or useful for people to move money out of a, in a kind of a underhand, slightly undetected. I wouldn't say it's perfect for moving your family wealth, or maybe it is. I don't know. Is the it would be for my family wealth. But let's say if you're a Chinese, well-connected Chinese individual, usually they just buy property in Vancouver or LA or somewhere like that, or Brazil, buy faraway property and then move there on some sort of visa deal. Where else? I suppose Switzerland is probably a big favorite for them as well. But this kind of thing, to me, smacks of someone or group of people trying to move a large amount of money quickly. Maybe their wealth, maybe they're, maybe it's a last-ditch clause. Maybe maybe they know something is coming pretty soon, and they try to front run it, get out of there quickly. I'll just mark this one. Mark that box there as a possible indicator that something is coming pretty soon. Terrorist attack, Taiwan. Would you keep an eye on Taiwan, the Taiwan Strait? Maybe a move into Lebanon. Maybe the wider Middle East war is coming. Maybe Iran gets involved. Maybe the US is about to get involved, that they don't know yet. I think something big is coming. And this may just be a harbinger for that. So I'm ending this week's update. Excuse me. I've got some sort of frog in my throat. I'm ending this week's update with a kind of a harbinger, a warning that something is coming. And it may well be a la 9/11, that type of magnitude of action is coming. Excuse me. So if that does worry you, I would suggest that maybe it's time to think about longevity and your experience after this experience. So I was reading the book of Job this week, and there's a line in there where he talks about man who trusts in their own wealth and their own possessions for their, as a measure of their righteousness and a measure of their, success. And the image is like a man leaning on his house, and the house turns to ashes and he falls. So I think that's probably where we stand. We are leaning on our house, and the house is about to turn to ashes. So make sure you're not leaning on your own wealth or your own creation to justify you in eternity, because that's not how it works. God's economy is completely different. Unrecognizable for most people. God doesn't judge you on the righteousness that you have built up, that you measure yourself by. God judges you against his own righteousness. And that's infinite. And it's perfect. And we don't measure up. And God loves you. And he wants to fellowship with you. And he made account for that. He made a way for that to happen. And that is true salvation. Yeshua. Jesus. And if you put your trust in him, rather than your own righteousness, let him be your righteousness. And then you have fellowship with God. And I'll end with that. And maybe I don't get back next week, or maybe I do. I don't know. Maybe something has already happened by this time next week. But think about the long run first. And then we'll deal with the short run. Okay. Godspeed. And God bless.